You're thinking about moving to Las Vegas, Nevada, and you just want to know what does it cost or what should I make in order for me to be able to live in a home for 433,000, 650,000, 1 million. Well, in this video, we're going to tackle exactly that. So stay tuned. And like we always say, let the show begin because we're getting after it right now. If this is your first time to our channel, make sure that you like, subscribe, give us a thumbs up. We really appreciate it. It does help with our algorithm, and we want to make sure that we're getting you all the information that you are hoping to receive here in the Las Vegas, Nevada area. When it comes to moving to Las Vegas, Nevada, or even the Henderson area, we can help you out in both. North Las Vegas as well. So all of those different areas we can help you out. With that being said, guys, what we want to do is not just show you what it's going to take to be able to afford a $433,000 home, which is the median priced home according to Realtor.com here in Las Vegas, Nevada. But like we said, we want to show you at the end of the video, what does $650,000 cost, or how much do you need to make in order to live here in Las Vegas at $650,000, and what do you need to live here in order to make $1 million to afford $1 million here, so forth and so on. So let's jump in with that being said, guys. 433,000. At 433,000, what we want to look at is that we're going to do rough numbers. So first and foremost, we're going to let you guys know, not a professional mortgage lender. I'm a professional team leader, real estate agent. I've been doing this for about 16 years. Of course, we are familiar with numbers and familiar with most people are thinking about in regards to what they usually put down, so forth and so on. We're going to give you some rough numbers in the sense of what does it take to do 5% down. Putting 5% down, as little as 5%, and get yourself into a wonderful property. So with that, we're going to take that 5% number and show as little as 5% and get yourself into a wonderful property. So with that, we're going to take that 5% number and show you what it takes to be able to afford a $433,000 median priced home here in the Las Vegas area. So at $433,000, if you numbers here, guys, so 5% down is just, we would be looking at around, again, rough numbers here, guys. So 5% down is just over 21,000, like 21,650. So your mortgage is going to be about $411,350. So your mortgage number would be $411,350,000. That's how much you would be financing for 433. 6.5%, but we're going to tell you it's around 6%. We're going to use 6% because we believe we can actually help, we can get sellers to help you nowadays to buy that rate down. So we're going to look at 6% as far as your interest rate. And with that, we take that 411,350 times that 6%, and that's going to give us about 2,468 was what your mortgage would be. Now, it does not stop there, guys. Remember, you have to do everything in the sense of your taxes, your insurance, so forth and so on. There's 4 parts to your mortgage. It's going to be your principal, it's going to be your interest rate, it's going to be principal, it's going to be the interest, it's going to be the taxes, and it's going to be the insurance. You want to look at all of those different types of things. Now let's talk taxes and insurance. Taxes is usually going to be about 1% of the sales price or the base price of what you're purchasing. So in this case, if we're purchasing 433, we take about 1% of that. We're going to take that number, and that's going to give us about 430. Like 400, let's take $432 additional a month is what we're going to add to that. So we're going to take that 2,468, add that 432, so forth and so on. And then your insurance should be about, again, rough numbers here, $80, $90, so forth and so on in regards to that 433. Let's say $80, $90 or so. So with that being said, we're going to look at now our, what's called our PMI. We're going to be our mortgage insurance. Now, again, like we said, we aren't done there. It's going to be looking at our principal. We're going to be looking at our taxes and insurance now at this particular point. Our taxes, we want to think about them being probably about 1% of our actual purchase price. So if we're looking at 433, 432, I think would be a good tax number. So we'll put 432 in that sense. Again, you're gonna get all these numbers checked, and you're gonna go to an actual professional mortgage lender. You're gonna get your final numbers, because of course, depending on what you put down and what you your credit scores are, so forth and so on, all that kind of great stuff is gonna be a big factor in regards to what these numbers really iron out to be for you. So again, we're giving you rough numbers. We are assuming that your credit is in a great stance. You don't owe any debt, so forth and so on. But again, looking at our taxes, 1%, 432. We take that, add that to our 2,468, and then we also take the insurance amount because we didn't put down 20%. When you don't put down 20%, you are going to have what's called mortgage insurance on your property. Since we don't put down 20% in this scenario, we are going to have about $80, $90 that we want to add to that as far as our property or our PMI with the property. So taking all those numbers, 2,468, your 432 as far as your taxes, and then taking that $80 or so in regards to your insurance, you're probably looking at, $80 as far as your taxes, $171 as far as your insurance. You're probably looking at around $3,151 for your mortgage in regards to a purchase of $433. Now, again, a mortgage mortgage person is going to look at your scenario and they're going to do what's called your debt to income ratio at around 45%. So we take that 3,000 and change and we multiply that times our 45%. 6,766 is going to be the income that we would think, or that your lender would want you to basically be making per year. If we were to even that out, that's 6,766. Let's say $7,000. $7,000 times your 12 would give you $84,000 a year. So in order for you to afford comfortably a house of $433,000 as far as the purchase price, you want to be making at least $84,000 a year for you to be able to afford that. So hope that helps out. And again, like we said, guys, let's come back to this day. Let's come back to our channel so that we can make sure that we can give you that 650,000 and that million later on. 5% down. 5% down is around 21,000 and change. So that means we're going to be financing about $411,350 or so. So if we take that financing, again, assuming that our credit is in a really fantastic place, we don't have debt, so forth and so on out there, we're going to take that 411,000 and change, and we're going to take it at an interest rate of around 6%. Probably today's date is around 6.5%, but maybe we can get the seller to come in and contribute and bring some of that down. So we're going to take us at 6% in regards to our interest rate. Now, with that, that takes us to about 2,468 as far as the mortgage. I'm just doing my math here. And even at 2,468, we are not done yet. We want to make sure that we look at things like our taxes, our insurance, what's called PMI, our property mortgage insurance, because we did put down 20%. So with the taxes, you want to think about 1% in regards to the purchase price that you're doing. So if we're looking at a $433,000 house, that's going to be around 430, 432, something to that effect. 432 is the number that I put down here. So we're going to take that 432, and then next we're going to be looking at our home insurance in regards to what our home insurance possibly would be. 80-ish, 90-ish dollars, I think, should be a really good number in regards to what your home insurance should be at a 433. Again, you'll check that out. You'll meet with people. You'll get quotes. You'll get those numbers, and you can put those numbers in. But we want to make sure that you guys understand. You want to look at those additional costs and not just what the monthly mortgage is without looking at your taxes, your insurance, and all of those different types of things. Your PMI, if you have PMI, if you don't put down a certain amount, so forth and so on. So with that, your PMI on this particular situation, since we did not put that 20% down, is going to be an additional around $171. So we take all of those different numbers from the 2,468, getting our monthly tax of 432, looking at our insurance of around $80, and then we're looking at our PMI of around 171, and that's going to get us to about $3,151. $3,151 is going to be the mortgage. At $3,151. Your lender is going to want to take that number, and they're going to want to make sure that you're doing at least 45% debt to income ratio. So we're going to multiply that times 45%. And that's going to give us, going over it, guys, we're going to take our monthly mortgage, which is 2,468. We're going to multiply that times our 432, which is going to be our 1% of the sales price. And we're going to take our home insurance of about $80. We're going to add that in. And then we're also going to take our PMI again, because we don't have 20% down. We're going to take that PMI, which is going to be about $171. All of that comes out to about $3,151. Now, again, your mortgage person is going to take a look at that number, and they're going to want to at least know at least that you have a debt to income ratio of about 45%. So we take 3,151 and we divide that by 45%, and that gives us $7,002, excuse me, $7,002 per month in order to comfortably afford that mortgage payment of about $3,151. We take $7,002 and we multiply that times 12 months in a year. $84,026 is what you want to be able to at least make in order to comfortably afford that 433. And now the 650,000. Let's take the 650,000 scenario. So we're going to write this all down together. We're taking 650,000, do that 5%. So we're going to clear that 650,000 minus 5%, which is $32,500 is our 5%, equals 617,500. So that's how much we would finance. $617,500 is what we're going to be financing. So financing $617,500, we are basically going to, again, look at that interest rate of about 6%. We know it's about 6.5, but we're going to take 6% just for even numbers. So we're going to take that we need to make in order to afford a $650,000 mortgage payment. In order to do a $650,000 mortgage payment, what you'll want to do first is to take the mortgage amount minus your down payment. We're going to use 5%. So at 5%, you're going to put down just over $32,500. So of that, you're going to be basically financing $617,500 is how much you would finance in that situation. $617,500 is going to be that financing number. Even though you have that 6,1700 as far as your 16,700, 617,500 is going to be what you're financing. Now, even though you have that financing number, you want to take that and you want to take the interest rate. We're going to take an even 6%. 6% is basically going to give us about a $3,705 per month as far as your mortgage would be concerned with. $3,705. We're not done yet. We still want to add everything from our PMI, our insurance, so forth and so on. So in regards to PMI, again, that's going to be that money that since we didn't put down 20%, that we have to pay that insurance on that particular loan. So we want to take that number in regards to that 3,705. Taxes, we want to look at 1%. 1% of the $650,000 purchase price is going to be about $650. You want to take that $650. On a $650,000 purchase, you want to take 1% of that, which would be $6,500. You take that $6,500 and you divide that by 12, since there's 12 months in the year, and that will give you $541 a month. So that's going to be your tax bill each month on a $650,000 property. We're still not done. We have homeowners insurance and we still have that PMI. Homeowners insurance around $650,000. Again, you want to double check this with your specific vendors on this. I'm giving you rough edges, rough numbers. You can probably assume that would be about $130, $140, $50 kind of number. Let's take $130. So we're going to take that $130 and add that again to all these numbers that we're putting on there. And then the last thing we need to do at this particular point is going to be our PMI, our property mortgage insurance, since we didn't put down 20%. And in this case, our PMI is going to be around $3,087, I believe is the number that we came up with. So about $3,087. And again, we take that and divide that by 12 months. Divide that by 12 months and we get $257. So now we have all of our numbers that we want to add together to give us what our monthly mortgage is going to be for a $650,000 property. Once you have that mortgage amount of $3,705, you're actually going to take that and divide that by the lender's 45%. They want you to do that debt to income ratio of about 45%. So it'd be $8,233. $8,233. What's our next step? What they want to be able to do at this point is multiply that $8,233 times 12 months. Looking at about $98,796 is how much you want to be able to make in order to comfortably afford a $650,000 mortgage here in the Las Vegas, Nevada area. Remember, we're going to come back and we're going to do our next one at $1 million. And we had our previous video where we did it at 433. So take a look at those videos as well. How much do you need to make in order to afford a $1 million property here in the Las Vegas, Henderson area? Stay tuned. $1 million property, normally my clients are going to be a little more liquid in the sense of the money that they can put into these properties. They will normally want to put down about 10, 15, 20%. I would say on average, most of them are at least putting 20%. They don't want to borrow too much money. They don't mind using money, so forth and so on, and allowing them to move forward, but they do want to get some kind of money into the game. So they're going to put about 20% down. So if we take $1 million and we put 20% of 1 million, we are going to be putting down $200,000. How much do you have to make, or how much do you need to know as your mortgage payment for $1 million here in the Las Vegas Henderson area? Well, let's take it again at not the 5% like we have done in the other videos as far as the 433 and 650, but we're going to put down a 20% down payment in regards to $1 million. Most of my higher end clients do want to put a little bit more skin in the game, and they put down that 20%. So if we're financing $800,000, what would our mortgage be? Financing $800,000, the mortgage would be around $4,800 a month. Again, like we say in our other videos, it doesn't stop there. The thing we want to look at is going to be the tax. Again, it's going to be 1% of the actual amount of the property, not the part that we're financing, but we're looking at $1 million. So let's say $100,000. $10,000 is going to give us our 1%. Take that $10,000 and we're going to divide that by 12, and that should give us around $833 as far as what our taxes should be each month. Going to be now our insurance. Because we did put 20% down, we shouldn't necessarily deal with the PMI situation. So we're just going to take those three numbers, add those three numbers together, and what do we get? $5,833 as far as that number. Again, we want to take that $5,833, and what do we want to do next? Basically, we want to take that again to the lender's debt to income ratio. Again, we want to take 45%. Actually, we can take 43% when it comes to jumbo loans. It's going to give us $13,565. So $13,565 is what the lender is want to see that you can comfortably make in order for them to feel confident about this particular loan issue. $13,565. Then the magic number, we just multiply that times 12. It gives us $162,781 is what you want to feel you can make throughout the year in order to afford $1 million here in the Las Vegas and the Henderson area. These rough numbers, I'm going to say this constantly over and over, not a mortgage professional. I am a fantastic, phenomenal real estate team leader, a real estate agent that we can connect you with other agents here to help you get this done. They aren't putting that 5% down. They're usually putting around 20% down because they want to put a little bit more skin in the game. Putting 20% down, we are financing an $800,000 loan. When we look at that $800,000 loans, the mortgage from $800,000 is going to be around, I'm looking again at 6%. It depends, again, on your situation, what the interest rate is, it will be. Looking at that 6%, we're going to be about $4,800 is what the mortgage is going to be. Again, like we always say, we're not stopping there. We're taking that $4,800 and we're going to look at the taxes of the actual purchase price of the property, which is $1 million. So that's going to be 1%. We then take that $10,000 and we divide it by our 12. That's going to give us our monthly tax. And that tax is going to be $833. So now we have two numbers here. We have $4,800 and we have $833 as far as the tax. The next step after that, we are going to be looking at our homeowners situation. We're going to put it at $200. So we take that $200. Now in this particular situation, because we did put down 20%, we will not have that carry of property mortgage insurance. We don't have to worry about that. So we're going to take these three numbers, and that's going to give us our number as far as our mortgage is concerned with. That mortgages is going to give us $5,833 is the number that we will get at that particular point. $12,962 per month. Is that doable for you? If it is, $1 million home is something that you can basically be able to afford in the eyes of a lender. So the calculator. So again, let's get that number right. $162,781 is the number that you're looking to be able to annually afford or annually be able to raise in order to afford a beautiful home here in the Las Vegas Henderson area at $1 million. Guys, again, with that being said, I hope this information was valuable to you. Please hit those buttons down below, hit the thumbs up, hit the subscribe. We would love for you guys to follow us so we can provide you with great information. Let us know what you're looking for. We'd love to make some more videos for you. And then with that being said, check out our other videos where we talk about the mortgages and affordability here in the Las Vegas area. And we'll see you in the next one. Take care.